Welcome back. Now, more major high street lenders have cut their mortgage rates, bringing some relief to those facing higher bills. Barclays and Santander have reduced what they're charging borrowers following reductions by HSBC and Halifax last week. Well, let's talk now a bit more about it with mortgage broker and director of R3 Mortgages, Riz Malik. Riz, nice to see you. So what's happening in the mortgage market at the moment?
So we've come back from the Christmas break and the lenders are out fighting ultimately to grab business. There's been some decreases in the price of the cost of funding in the wholesale markets, so the lenders are ultimately pricing it down. We started off towards the end of last week with HSBC coming out, and as you mentioned, Santander as well as Barclays have also cut rates, and these are some quite decent rate cuts. So considering where we were in 2023, where every time I was coming on we were talking about rates going up and up and up, this is a very welcome piece of information and news for borrowers across the country.
So what kind of levels of rates are being offered now?
Yeah, so you could pick up in some instances five-year fixed rates for under 4% at 60% loan to value.
And it was up to sort of 6% last year, wasn't it?
The rates were changing on a daily basis as of last year, so they have come down quite a bit from there onwards. A lot of people are expecting a few more cuts, but I don't think that we will be getting aggressive rate cuts thereafter unless we get some key economic data coming out that shows us that we're heading towards our 2% inflation target.
But of course, the problem is those who are coming off rates, who had signed up for them when rates were much, much lower, they're going to be seeing a massive jump, aren't they?
Unfortunately, that's still a problem, and a problem that we face on a daily basis, having to deliver bad news for those coming off rates, starting maybe with a 1 or 2 and dealing with the current rates. But the landscape is better than it was towards the second half of 2023.
Now, there are some predictions that rates could drop below 3% by the end of the year. Do you agree with that? Do you think it could go that low?
I'd be surprised if we get to that level, but anything's possible. But the one thing that 2023 did teach us is it's important to hedge. So if you do have a deal that is coming up for renewal within the next 6 months, don't automatically assume that the rates close to the time will be better than the ones are offered at the moment. We've still got a number of factors that could feed into mortgage pricing. So although rates are coming out of January with a bang, don't assume that that's always going to be the situation.
And that's a timely reminder, isn't it? Because that's something that I didn't realise until I came to remortgage it a couple of years ago, that you can lock in your rate 6 months in advance. You don't have to wait for the day that your mortgage ends to lock it in.
That's absolutely true, but there is a slight problem with that. If you do lock it in 6 months in advance...
And then it goes up.
And it deals with... or you deal with the lender directly and the rates come down, don't assume that lender will automatically tell you there's a better rate for you on the market, even though your new mortgage deal hasn't started yet. That's why, for example, the broker community monitor rates regularly for their clients in most cases to see if there are better deals nearer the time. Is it worth switching or moving? So 2024 is about the hedge, and that's what we've learned from 2023, but rates are coming down, so that is good news.
I mean, do you think there is going to be a permanent change in the market? Where do you think it's going to stabilise at?
I think the rates that we're going to see within the next few weeks are really going to dictate what the borrowing landscape's going to look. And I think the only thing that's going to trigger a change from there onwards is either the budget or the first rate cut of 2024. Now, when that will happen is anyone's guess at the moment. Some people are talking about March. Some people are talking about going into summer. I think that will be the pivotal point to see where we're going to go, as well as inflation data as well, which is key.
I mean, any fear that the rates could shoot right back up again, that this won't last?
Anything is possible, and I think even the current geopolitical landscape attests to that. However, with what we're seeing at the market, the landscape is very different to where we were last year. So hopefully we've come through the pain and we'll be able to get on with getting this housing market moving, which is what a lot of people are waiting for.
Yeah, indeed. Riz Malik, mortgage broker, always good to see you. Thanks a lot for coming in. Thank you.